welcome again. I'm Danitza Nicklow, real estate agent with Berkshire Hathaway, the preferred realty in Pittsburgh, here with Jessica Lyons from Lyonsgate Funding. Hi, Jess.
Hey, Danitza, how's it going?
I am very good. How are you today?
I'm doing great. Thanks for asking.
Awesome. Well, we're here today back for just a little bit of a mortgage update, mortgage talk. Today, we're going to talk about credit utilization, credit scores, all of that kind of stuff. So, if you have any questions, please feel free to ask us in the comments. We'll get back to you. But Jess has 3 great tips for us to think about in regards to credit and the, mortgage loan process. So what do you want to share today, Jess?
Yeah, so the first thing I wanted to start with everybody is revolving credit. So those are your credit cards. Um, Surprisingly, that really has one of the biggest impacts on your credit score. When you're using revolving credit, everybody has a limit. And so number one, you never want to go over that limit because Danitza, you can drop your credit score tremendously just by going over the limit. Even if you pay it off the very next month, the credit is looking at a snapshot in time. So basically, when they're looking at your credit, whatever is on your statement for that month, what you owe, that's what's going to show up at the credit agency. So if your limit is say 10,000 and you go to 11,000, it can instantly drop your score. I've seen it as much as 40, 50 points for going over the limit. So number one, do not go over the limit no matter what you do. Number two, I think you need to really stay around 35% of whatever is available. So if you have a credit card that has $1,000 limit, you don't want to exceed $350 at any given point, because once again, it's a snapshot in time. So whatever's showing on that statement, whenever the report's pulled, that's what's going to be what they're considering your utilization ratio. And as that utilization gets higher, it starts to pull your score down more and more. And credit cards have a much higher impact on the credit score than something that is like a fixed. So for example, you have auto loans, student loans. With an auto loan, you are basically, your loan is secured by a car. With a mortgage, it's secured by your house. So credit cards are not secured by anything. So because of that, whenever they're looking at credit, it is actually looked at more so than things that are secured, just because the investors know if you're making your payments on your credit card, there's nothing there that they can come and take. So it just, I think, shows your character a little bit better and your ability to repay, because there's nothing that they can come after. So
Now, with the utilization, you want to look at, total utilization too. So not just
correct.
card in particular. So, your overall account has to be 35%, or all accounts should be 35% or less.
Yes. Yeah, you can go by individual, but you also, when you add all the individuals up, it's going to look at the same thing. And some people will say, well, I have this card, I'm not using anything. It doesn't matter. They're looking at individual trade lines. So if there's a lot of people will use one card because they get perks or something on it. My advice is, if you're using that card and you're going over that 35% pretty often, your best bet is to ask for them to raise the limit up. That way it'll give you a higher amount that you can use and still be under that 35%.
Great idea.
So that's the first thing. And that's so important. Like, if anything, that is really key, is just keeping those things there, because even people with phenomenal credit will see their scores fluctuate because of the ratios and the utilization. So and the great news is, if you're making all your payments on time and your utilization ratio is higher, once you pay that down, your score will go right back up. However, when we're dealing with the lower credit scores and the middle credit scores, that's where we see it start to take a little bit longer for the scores to bounce. So it's very important for everybody to be aware of that and just pay attention to it. The other thing too, Danitza, is when people are in the process, you really want to make sure if you can set your payments on auto pay, that way you don't have to remember to pay them. If it's already set up, even if it's set up to make the minimum payment, you just really want to make sure that everything's paid on time, because when they're looking at credit, once again, if you've had a recent late payment, it's going to have a bigger impact and pull down on your credit score. And so when we go through the underwriting process, sometimes it can be a problem if there's a late payment or two late payments on something within the last 12 months. So you just really want to make sure you're paying all those as best you can. And, you know, even if you don't pay them on the exact due date, as long as you pay them, you know, within a few days before it's gone past
That
30
grace
days,
period.
it won't show up on your credit. So don't just think I'll let it go till next month and get it when that payment comes due, because that will affect you pretty tremendously. But if you pay it a day or two late, it's not going to come up on your credit. It's just going to be, you're going to pay a late charge. So,
Yeah.
super key to really pay everything. And like I said, just set them on auto pay and forget about them. And then you won't have any problems.
So now people with lower credit scores, I mean, keeping accounts open and moving and rotating is a good thing. What's some other ways people might be able to increase their credit scores? Or
Yeah.
if they don't even have one to start?
Right. Yeah. So we do see that quite a bit, where people pay cash for things because they've never really needed credit. And then when they go to get credit, they have a problem because they don't have any history. So one of the easiest ways to help get a credit score pretty quickly is to find a parent, a brother, a sister, aunt, uncle, somebody that you trust that will add you on as an authorized user on an account. So that being said, like basically you want to find them an account that has been open for a long period of time. It's also going to be an account that has a good payment history. And then you also are going to want their ratio on the credit card. So for example, same thing as what we were just talking about. If they've got a card and the limit is 1,000, you don't want it to be showing more than 350, because even though you're just an authorized user, if it's on your credit, it can show positively and negatively. So if that person goes and makes a late payment, now it's showing on your credit as well. So you really want to make sure you pick the right person to add you on as an authorized user, but it is definitely the quickest way to get credit scores, and they can add you on to multiple cards. It doesn't just have to be one. So if they want to put you on 2 cards or 3 cards. And the key with the authorized user too is sometimes people will call in and they'll say, okay, yeah, we'll give them a credit card, but that's not really what you want. You want to make sure that they're asking for the social security, because if they don't ask for that social security number, it's not actually going to reflect on their credit. So
Yeah.
even though they're listed with the credit card company as an authorized user, that means if they were to go out to the store and want to buy something and they had a card, they could. That's not what you're looking for. What you want is you want them taking your social security so that it is showing up on the credit and giving you credit for that. Um,
So
the
basically, you want to find somebody that is going to be a good mentor for you credit wise, that, you know, is going to help you learn and teach because they're already doing all the right things to have a good credit score and good credit history.
Yes, 100%. That's exactly what you want. You want somebody with great credit that's willing to like help you out and show you the right way. And it's amazing how quickly, if you get added on to an account or two as an authorized user, how quickly your credit score can increase and show up even if you didn't have one. The other thing too is if you don't have credit or your credit score is kind of low, sometimes establishing new credit. So you can get a secured credit card. There's a website, Credit Karma. If you go on there and put in secured credit card, it'll list all different companies that offer them. It usually will give you information about what the rates are, if there's any kind of fee. But the way the secured credit card works, Danitza, is kind of going back to what we were talking about, having something to back up. So like an automobile secures an automobile loan. So if something were to happen, they come and they take the car back.
Yeah.
Well, with a secured credit card, if you get a limit of $500, you give them the $500 up front, and that secures the credit card. Where I've seen people make mistakes in the past is they think because they gave them the money up front when the bill comes that they're not responsible to pay it.
Yeah.
Unfortunately, that is not the case. That money is just there to secure the credit card. So when the payments come, you need to be sending the payment in. that money, when you close out the account after you've had, a history or whatever down the road, then you would get that $500 back. But that money is just there to secure it. And talking about like closing out accounts. So sometimes people think it's good for their credit to go through and close out accounts that they haven't used for a long time.
Yeah.
This actually can have a negative effect on your credit. If you do that, sometimes it'll actually drop your credit score because now you've gone from having this history and it's no longer there. So I always tell people, if you have like an older credit card, even if you don't use it, just keep it open because you want it to still report on your credit. You don't want to close it out.
Now you can lock the credit card, correct? So since you're not using it and seeing a statement, you're not going to be at risk for somebody else using it and damaging, correct?
Correct. Yep. And another thing too, like talking about locking things. Um, if people want to, like in this day and age, fraud is really bad, especially after COVID. I'm sure you've seen it.
Oh yeah.
We see it in every avenue of life that we deal with. But you can go in and if you want to freeze your credit while you're not doing anything, you can freeze it and it's very easy to unfreeze it. So I do kind of recommend that for people because then you don't have to worry about anybody getting a hold of your credit and doing anything. In order for them to open any kind of account, they have to call you at your cell phone number and you have to authorize it. So no accounts will get open if your credit is
Great
frozen.
idea. Now, do you just do
And
that to like your individual credit cards, or is there like a, do
you
you
can
call
do
it
it to
Experian or TransUnion?
Yeah, you can go directly to the bureau. So you can go to Experian, TransUnion, Equifax, and you can freeze your credit directly there. And they will give you like a PIN. So it's super easy to go in and unfreeze it. Just make sure that you keep that PIN somewhere so that you know where it's at when you need to freeze it.
Well, we're gonna put that
Um,
on my to-do list today for sure. So thank you for that advice.
you're welcome. Yeah, it's a good one. I mean, it just protects you.
Yeah.
So
Now,
um
one of the things I have run into, unfortunately, with a client that we now have some delays with closing is that they went and used their credit card during the they were under agreement and they went and they used their credit card for a larger purchase or cash advance. And that has drastically hurt them. Can you, share a little bit more about why that's not a good idea and, ways to maybe mitigate that?
Sure, yes. So from an underwriting standpoint, we are not allowed to use credit cards or loans for the cash for closing. Most programs will allow you to get a gift. There's definitely different ways to get around that, but that is definitely not one thing that you want to do. You can never take a loan or take a cash advance against your credit cards because what's happening, as we talked about fraud and we talked about that a little bit before. Unfortunately, there's people out there that are applying for multiple loans and things at the same time. So from an underwriting standpoint, typically the way it works, Danitza, is we pull a credit report in the beginning of the process and we submit to underwriting with that credit report. However, whenever we get towards the end of closing, they do a soft look to see if any new credit's been established or if any of those accounts have changed. And so I'm sure that's probably when they found that your person
Oh
had
yeah.
taken out the extra money. So I know that sometimes people think, oh, they pulled my credit in the beginning, I'm all good. No, that's not the case. You want to make sure that from the time you start the process to the time you sign the papers and get the keys for the house, that you are not doing anything that is changing your credit in any particular way. Because sometimes they might not look at it, but then if they do and you have a problem, you're going
You're
to be
pretty
very
stuck.
sorry.
Yeah.
So it's just easier. But the key is if you have an issue with coming up with your cash for closing or whatever, talking to your loan originator or the mortgage professional and letting them know what's going on. They know how the programs work and we can advise on what you need to do in order to get yourself to the position that you need to get to. So the key is just being open and honest with your loan originator so they know what's going on. And then that way they can advise you the best that they can.
Yeah. So Communication always between real estate agent, between loan officer, that we're all working together, a team to get to the same goal. So hopefully, everybody takes that to heart, and that's the key thing, because, other problems we can come up with or solutions, but we got to know what the problem is first. So yes. So anything else that, might be worth noting about credit history, credit cards that you can think of now?
Well, so with credit, people always ask how long it takes for things to drop off the credit. And technically it's supposed to drop off after 7 years. However, the way credit works is normally that doesn't actually happen, because a lot of the times with like say collection accounts or charge-offs, normally those things get sold, and they get sold for pennies on the dollar. So one collector will buy it, and if they don't get the money, then it'll get transferred over to somebody else. So when it gets transferred over to the new person, it becomes a new account, and now that reports for 7 years. So it's very hard sometimes to get things off the credit. There are companies out there that do credit repair, and some of them are really good and some of them are really not good.
To do your homework.
Yes, you definitely need to do your homework, but if somebody needed help with finding one of those companies, I do know a few good ones that I could definitely recommend. But the best thing I can say is try to pay everything on time and not run into
Not
that
needed
issue,
in the
because
first place. Yes.
it's very hard once it's on there. And the thing is too, sometimes even after you pay them, it's hard to get them to remove the stuff, because once they have their money, they don't really have much incentive to do anything to help you. So if you do have a collection account or something like that you're going to pay, make sure you keep proof of the payment. So if you can send like a certified funds check or a money order, and then you also want to get a letter from them saying that it's satisfied. And then that way, if you need to, with that proof, you can go back to the credit bureaus, Experian, TransUnion, Equifax, and you can dispute the information and have them update it. And if you have the right paperwork, they'll just remove it. If you don't, they'll reach out directly to the creditor to get that updated. So
could take a while without the paperwork, right? Yeah.
Oh yeah. If you don't have the paperwork, it's going to take a few weeks to get that updated and figured out. But if you have the paperwork, sometimes you can get it cleared up as quickly as a few days. So and there are some companies that you can pay to expedite it, but ideally, if you're considering wanting to purchase a home and you think your credit is kind of iffy, you should really talk to a mortgage professional like me or someone else that can take a look at your credit ahead of time and like tell you what you need to be working on to get you in the best position when it comes time to go purchase that home. Because if you wait until you want to buy a house, you really don't have time on your side, and it's hard to fix things quickly with credit. So if you get ahead of it and you get working on it like in advance, you're going to be in the best position when the house comes up that you want to put in the most competitive offer, and also to get yourself like the best rate and the least amount of money for closing costs and things like that.
Well, thank you for all that advice. It is wonderful. So hopefully, our viewers take that to heart and, have questions, reach out to us. As Jess said, that, she's always welcome to help. Even if your goal down the line is a house, get the process started and know what you're going to do now to get there. So, again, I'm Danitza Nicklow with Berkshire Hathaway, the preferred realty, and this is Jessica Lyons with Lyonsgate Funding. And we are very thankful to have you watching us today. Reach out if you have any questions, comments below. Have a wonderful weekend.
Thanks, everybody. Bye.